How's it going, Mullenites? I hope you're all doing really well. So obviously we're going to talk a little bit more about the continued downward spiral of the stock. As of yesterday, Mullen stock had fallen to just 24 cents per share and making that the 13th consecutive day that it's now traded below the critical $1 mark. So for investors, this is obviously raising serious concerns about the company's future and whether it can recover from such a prolonged slump without any adverse corrective action, i.e. reverse stock splits. Anyway, now there wasn't any major news from Mullen yesterday, but I recently came across something interesting. A Schedule 13G filing from the SEC that was on Monday, which I didn't actually see at first. Now, the filing was by Ault Alliance, a company that now holds a significant stake in Mullen Automotive. Specifically, Ault Alliance disclosed that they own around 4.4 million shares of Mullen, representing about 9.9% of the company's outstanding shares. But here's the kicker. These shares are linked to warrants, which are financial instruments allowing the holder to purchase additional shares at a set price, in this case $6.07 per share. Given that Mullen stock is trading at just 24 cents, you might wonder why anyone would exercise these warrants. The answer lies in the structure of the warrants themselves. Ault Alliance has the ability to execute these warrants using a cashless exercise option, which allows them to convert the warrants into shares without paying the full price up front. Instead, they use a formula based on the stock's current price and volatility to determine how many shares they'll receive. Now, it's important to note that Ault Alliance is capped at owning no more than 9.9% of Mullen's outstanding shares. However, the potential for future dilution is very real. If these warrants continue to be exercised, more shares will flood the market, further diluting the value of existing shares. And this is on top of the dilution we've already seen due to stock-based compensation for executives. Just last quarter, Mullen's share count basically increased by 16 million shares, largely because of these compensation packages. And let's not forget the potential for up to 85 million new shares that could be issued through other warrant exercises, but that 85 million does include Ault Alliance. This looming dilution is a significant concern for current shareholders as it would further erode value of their investments, obviously. The fact that Mullen has now spent 13 days below $1 is particularly troubling. Not only does it reflect a lack of investor confidence, but it also puts the company at risk of being delisted from the NASDAQ. If Mullen can't push its stock back above $1 soon, they could face serious consequences, including losing their listing on the exchange, which would make it even harder for them to raise capital and recover. I've said it in the past, but I do believe that they are heading towards a reverse stock split. Over the past 13 trading days, the stock has lost about 75% of its value. The company's financial struggles, compounded by continuous dilution from stock-based compensation and warrant exercises, have put it in a very precarious position. Investors are rightly worried, and unless Mullen can pull off a significant turnaround, things could get worse before they get any better. So what's next for Mullen Automotive? Will they be able to stabilise the stock and regain investor confidence, or are we witnessing the slow decline of a company in serious trouble? Only time will tell, but for now, it seems like it's probably a stock to stay a little bit away from. Share your thoughts on Mullen Automotive in the comments below, and until next time, may the markets trade in your favour. Cheers.